Two of my companies hit 52-week highs within the last 2 weeks. Yes, I'm going to brag about this because I put the work in. I put the time to analyze these companies and pick what I think is the best of the best. And I think you should brag too. So be sure to comment below if you have any companies that have hit 52-week highs recently, because it's good for all of us to look at these companies and see which ones are outperforming, to see if they're ones that we want to consider purchasing someday, maybe put it on our watch list. It's a great thing to do. That's what this is, a community of investors. We're all a family here. We want to help each other make lots of money. So the two companies that reached 52-week highs in my portfolio recently are Health Equity and Amazon. Now, Health Equity just hit a 52-week high of over $103. This might be an all-time high. I'd have to check. But I've gone out 5 years and I haven't seen it higher. And Amazon, as of 6 days ago, hit $215. And it has kind of regressed since, but I have confidence this company will be much higher than $215 in a year, 5 years, 10 years, so on and so forth. I have so much confidence in Amazon. But let's start with Health Equity. This is one a lot of people don't really know about, but they provide technology-enabled services platforms to consumers and employers in the United States. The company offers cloud-based platforms for individuals to make health saving and spending decisions, pay healthcare bills, receive personalized benefit information, earn wellness incentives, grow their savings, make investment choices, and have health savings accounts. This is what they're known for. They're the leader. They have the most market share of health savings accounts, and this company makes money off of fees. That is so incredible. It's just kind of reoccurring revenue for this company that's coming in. It's the toll booth effect that Warren Buffett talks about. They sit back when people open up these accounts, they start collecting these fees. And I believe health savings accounts, if you have not researched them, they are amazing. They have triple tax advantages. You can utilize it to save for retirement. So it could be that extra retirement account. Just so many things. Be sure to look into it. Of course, a lot of companies are doing their benefits now, and this is one I think you should highly consider. But enough of that. I've made a lot of videos too about this. If you want to go back and look more detailed about what health savings accounts are, more details about Health Equity, the company. But you'll see here over the last 5 years, this company is up 69%, just shy of that. And since 2022, it's kind of been taken off. Now, I bought just earlier this year, and I bought in about an average of $77 per share. Now it's about $103. So that just kind of shows you the increase, which you'll see my portfolio at the end and exactly how much in the green and how much profit I made with this company. But really, it's been a great performer in my portfolio. I'm so happy, and I'm bullish on this company long term. I think Health Equity, their main product, the health savings account, will grow massively in popularity. I see a lot of people adopting this healthcare plan compared to others recently, so I really think it's going to gain ground, and the fact that you can invest in it makes it have staying power. People don't touch that money typically, so yes, I'm very bullish. And we'll see here the fundamental analysis that shows that they are still considered very undervalued, of very high quality, they have high growth stability, and they're about average with the financial health. So let's look at the financials. Now, they don't report till December 3rd, so this is of their last earnings, but you'll see a very good story. Their free cash flows are increasing. That is so important. In fact, their last earnings, they said they were going to do share buybacks for the first time, up to $300 million. So that's returning value to the investors. That's not diluting us. That's helping us have more ownership of this company. Their revenue's going up, and their net income swung from a loss to an income, and it's been growing ever since. Now, the debt is going up slightly, but as a smaller company, you just have to utilize debt to grow sometimes. But you will see here on this next item here, I created the stock facts chart, and right now they are at almost a $9 billion market cap size. Now, their free cash flows, as we saw, are that $257 million, and a half million, shall I say, 257.5. And they're sitting at $103 per share. Now, their price per earnings, trailing 12 months, is 85.85. Now, you might think that is extremely high, but keep in mind their 5-year average is over 900. So as their earnings grow, their price per earnings shrink, and that's a good thing for us. That means this company's moving in the right direction. Price per operating cash flows decently high to 33.68. Cash flow growth over the last 5 years is about 17.79%. It's in line with revenue over the trailing 12 months, which is interesting at 17.19. And over the last 5 years, revenue growth has been 28.33. So gross margins improved, and now it's at 69.96. And their return on equity improved. It was about 2%. Now it's 5.11. So they're having improving numbers here. And that gross margin is very good. That's a very good number. Now, we saw that debt going up, but with their total debt to assets, it's at 30.79, which is very low, as well as their debt to equity at 48.43. I like to see these percentages below 50%, so this is great. Now, this company does not currently pay a dividend, but if they have continued success year after year, I think eventually they will. And if we look at price targets, this is something everyone likes to see. I will say right now, they're an outperform range with an upside potential of 3.72%. Now, when I've covered this stock, but just a couple, like 6 months ago, it had a potential upside of over 30%. Now we see here they've grown into that, and price targets have been rising over the last couple weeks. Analysts now have a high of $130, and you'll see the median there is at 105, and of course the stock's at 103 right now. I do think this company for a long-term investment is a buy, but if you plan on doing like 5 years or less, you might want to hold off. So I'm in it for the long term. I see great outperformance with this company should these health savings accounts continue to grow. But again, this is both a technology and healthcare company, so I like that combo. Now let's move on to Amazon. No introduction needed here. Amazon over the last 5 years is up 132%. Now it did take a dip and kind of bottomed out in 2023. I bought this company a couple years back, below $100 per share, just above $100. And then I added quite a bit more when I think it was around 150. But this company is outperforming over the last 5 years. Now, they are dominant with their Amazon Web Services cloud component. They're the largest online retail. This company just dominates, and it's the company of all things. They have businesses that you wouldn't even know of. They have a satellite business. They have, groceries, so on and so forth. Now, looking at their fundamental analysis, they are still considered undervalued, which I agree with. I think this company can get up to 250 pretty easily. The quality is high, the growth stability is high, and that financial health is in the middle, just like health equity was. And so if we look at their financials, we'll see their free cash flow swung from a negative to a positive, but it did dip a little bit last quarter. And I believe that's mainly due to this company putting more expenses towards AI, artificial intelligence. That's the buzzword now, but I think it is the future. And all these big tech companies are starting to spend heavily on it. So we're starting to see that hit its free cash flows. Now, revenue is kind of at a slow growth pace right now. It's kind of went up and then it dipped. And you have to know something because you'll see the net income there. It's growing over time. Fourth quarter is where this company really does well because of the holidays. People spend more on their online retail side of things. So yes, overall, growing revenue, growing income, growing free cash flows with the exception of the dip this last quarter. But their long-term debt is going down. So though their expenses might be rising, that long-term debt is going down. That's a great offset for me to see. If we look at their stock facts, we will see that Amazon is at a $2.1 trillion market cap. Now, I don't have the number on here, but they have over $44 billion in free cash flows. And again, they're just above $200 per share right now. They hit that 52-week high of $215. Now, their price per earnings is 43.48, but it has shrunk from the 5-year average of 82.13. So again, as the earnings grow, the price per earnings shrink. It's a better value for you and I over time. That's why we invest long term when we see a company that has growth potential. Price per operating cash flow is at 21.19. Cash flow growth over the last 5 years is 22.02, pretty respectful. Revenue growth over the last trailing 12 months is 11.93, and over the last 5 years is 19.80. Double-digit growth is great here. And gross margins improved to 56.63, as well as return on equity to 21.82. And then that debt profile overall is great. The debt to assets trailing 12 months is 29.06, and the total debt to equity is a little high, but it did shrink from last time, and now it's 69.87. So again, they're lowering that debt as we saw in that prior chart, and it's showing up here. Now, they also do not pay a dividend, but I have pretty high confidence this company that I expect their free cash flows to grow over time will eventually pay a dividend. And that will be a very nice day because I do have a big holding in Amazon as well as health equity. Now with their price target, you will see here they're in the buy range and they have an upside potential of 15.41. Now they have a high of 285 and a median of 234.5. Again, I think this company can easily pass $250 per share over the next 6 to 12 months. So if we look at my portfolio now, we will see here, overall, my portfolio is in the green about 33%, which kind of mirrors health equity down there, which is in the green for me 32.49. Mind you, I bought this company just earlier this year, so to have a company that's up 32% in less than a year is phenomenal. Again, I did a lot of research. I put videos out on why I'm so bullish on this company, and it's paying off because there are some things with this company that I think its future will continue to be bright. Amazon is the company that is providing me the most growth. It's up 83.34%. Now, 6 days ago, when it hit its high of 215, it was 91% in the green. I think soon this company will be at that 100% profit mark. So basically, I double my money there. But overall, these two companies are excellent. And if I had to choose one to buy right now, it would be Amazon. It's just the bigger company with the wider moat. It's the safer option of the two. But I think Health Equity has the chance to outperform Amazon, dependent on how quick they can grow those health savings account, collect those fees, increase that revenue, that free cash flows, and continue it to be a really good story. So again, I want to say, I want you to provide me with your companies that have hit 52-week highs within the last 2 weeks. Mine are Amazon and Health Equity, two excellent options in my opinion. So I want to get some more companies for us all to be able to see. So comment below. And let's keep this going. I want to continue to provide you with my top performers, but also my low performers. This is a very honest channel. I'll share the good. I'll share the bad. Heck, I bought Tattooed Chef, which is worthless right now. I sold it at a loss. This was years ago, but I did videos on it. So you'll see the good and the bad. I think this is a good channel to subscribe to get very common sense approaches to investing and not as non-biased as I can be, right? Everyone has some bias at some point, but you're going to get someone who is just going to put it out there for you. I'm showing my portfolio with every single video. So again, your 52-week high companies, and we'll see you soon on Mark Arnold's Finance.